YouTube, New Age Economist coming at you, and this is going to be an asset class overview for real estate. This video, I'm going to try something a little different. I'm going to go off script. So I was writing a general rough scrap. Wow. I was writing a general rough draft for this video, and realistically, I decided that there's not a lot about this stuff that the average person wouldn't know, and that's not really why I'm making these videos. So today I'm going to go into some of the basic terminology of real estate, but generally what your frame of mind should be when you're going into an asset class like this. Now, this is my second video in the asset class series. There's going to be two others. The first one was about paper assets, and in all honesty, there's not a crazy amount that you can do to invest into paper assets such as stocks critically. You sort of just buy the stock and it sits in your account, and you either get paid through dividends or appreciation. When it comes to real estate, there is a lot more creativity and critical thinking that can go behind how you make your profit in the sector. For real estate, there's two different kinds of real estate. There is residential real estate and there is commercial real estate. Residential real estate is very simple. It's real estate where people live, and you buy the real estate and you rent out the space to people, and they'll live in it and they'll pay you money for it. There's varying different degrees of residential real estate. You can get a house, single family home, detached, and you can get a duplex, which is multiple dwellings in the same property generally. There's not as many duplexes, but what a lot of people do is they'll convert their basement into a second apartment, and then they'll be able to rent that out for a little bit of extra income. But the purpose of this video is to challenge the way that you think about real estate and how you can make some money off of it. Because a lot of people think that you get your real estate and the price goes up, and that's where you make your money. And in all honesty, that's not going to get you anything anywhere soon, because most of the time it's very expensive to get into your first piece of real estate, and you're going to have to get some sort of loan to make it happen. This loan you can get through your bank or a third party lender, but usually those are a little more expensive. And generally, you just sort of live in it. And that's not a wealth creation tool. You know, a lot of people buy their home to live in it and they think that that's an asset. It's not. It's a liability. I promise you, if you get a house and you decide that you're not going to rent it out, you're going to be losing money on it. The price appreciation will not make up for the mortgage payments and the interest that you have to make on it. It's going to be more expensive than it is going to bring anything in, unless you find a way to leverage some of it to cash flow on your behalf, which means renting it out, which not a lot of people want to hear. They want to hear that they made a good choice by buying their house and that the price going up is going to be good for them. And while, yeah, it is, the price isn't going to go up forever. It's not. I'm sorry to say, but that's not how the world works. Prices of real estate going up is really more of a function of the value of the money going down, which means that getting a loan and paying interest to buy a box that's going up pretty much on par with inflation is not going to get you ahead. You're going to have to leverage it in some sort of way to get some cash flow in on your behalf. If you're not finding a way to make money to help you pay your mortgage on your real estate, it's not an investment. It's a liability. Now, there's different ways you can go about it. So, as I said, with a duplex, there's multiple dwellings on one property, and you can rent out one of those dwellings and live in the other one, and you can make a profit off of that. But generally, what I challenge you to do is find a way to make it as much of an investment as possible. And a lot of people won't do that with their real estate until they're buying their second or third pieces of property that they can't possibly live in both. So they have no choice but to rent out, the entire dwelling to somebody else. And generally, you can break even with a mortgage with like 10%, 5% down. If you rent out the entirety of the property to a good tenant, you can pay off the entire mortgage with the interest that's included in that mortgage, and still pocket an extra couple $100 for yourself at the end of the day. Which means that if you get a property and you don't have a mortgage on it, it ends up cash flowing very nicely if you can get some sort of leverage going on how you can make money off of it. Now, like I said, there's single family homes, duplexes, you can even get triplexes, condos, which aren't bad. Instead of paying property tax on a condo, you end up paying condo fees. That's the way that I look at it. So either way, you sort of have to pay a little bit every month, no matter what, whether it's a single family home, a condo. There's fees that you can't really get around unless you find a way to leverage that property for some sort of income. You're going to be paying that forever just for the privilege of owning it. So I challenge you to find a way to do that, whether it's renting out a room, or if in the case of a duplex, renting out one side of a room, or even in a case both. You get your duplex, you rent out one half of the place, and the half of it that you live in, rent out a couple rooms on top of that. Rent out a room. Find a way to leverage the real estate that you own into an investment, because if you don't, it's going to end up costing you more than the appreciation of the box itself. I call real estate a box because realistically that's all it is. Humans, we just need a box to live in that, stops the rain from hitting our heads and keeps the lights on. A stove and a kitchen would be nice, but ultimately we're spoiled and we chase this high society lifestyle that ultimately doesn't exist anymore. And yeah, the American dream where you have a family and kids and they all play in your house and you have beers in the garage, have your friends over, that's not for everybody anymore, unfortunately. And unless you're willing to play smart, at least for the early years or a little bit of your life, you're not going to get there. You're definitely not going to get there on your first house. I'll tell you that, because if you decide that you're going to get a house on a mortgage and live in it entirely by yourself, you're going to do that for the rest of your life. It's going to take you 30 years to pay that house off, and you're never going to get anywhere. So I really challenge you to find a way to leverage your residential real estate in one way or another to make a little bit of money off of it. Because if you can't, you're just doing what everybody else is doing, and that's not going to succeed for you. There is another half of real estate. There is we just discussed residential real estate. There's commercial real estate. Now, commercial real estate, I should have built some sort of a script for this video. There's three types. So there's brick and mortar storefront, which is retail. That's slowly dying off, but there are ways that you can get commercial residential real estate for storefront residential real estate and sort of turn a profit on it, specifically for things that you need easy access to. A lot of those businesses are going to be locally based, and that's going to have to tie into business, which is another asset class that you're going to have to get in on. We're going to touch that in one of the videos coming up. There's commercial real estate. There's office real estate, which is definitely dying. The need for people to go into the office is becoming so less apparent. And you as a worker, if any of you work from home, know if you can get away from the office, you're doing pretty good for your quality of life. So ultimately, the office building is a dead breed, and you can probably find a lot of good deals on office spaces that are going out of business if you have the capital to acquire them. And you can, if you're creative and can find a way to leverage that real estate for some sort of profit, I doubt you're going to find people who want to come into the office, so renting it out as office space is probably not the best idea. But if you have a little bit of change, maybe you can renovate it into something that's a little bit more useful for you. So instead of storefront real estate and instead of office space real estate, the third option, wow, my words, I got to stop recording videos in the morning. The third option would be factories. Industrial, that's the word I'm looking for. Industrial real estate. That's warehouses, that's factories, that's anything that isn't necessarily office space and isn't necessarily storefront. So realistically, in my opinion, industrial commercial real estate is probably one of the easiest ways to get in and just start to leverage that immediately, because you can buy a warehouse and rent out a portion of the warehouse space to private companies or individual. They're looking for it all the time. And in regards to that, location is very important. And when you're buying a warehouse or some sort of storage facility, you're the only person who has that storage facility in that specific location. So there's a good chance that somebody would find some use out of it one way or another. So realistically, find a way to leverage it however you can. That's the name of the game in real estate. There's always a way that you can get more creative. It's the single most creative and critical thinking asset class that there is out there. When you get a piece of a property, you have the sovereignty to create a deal for leveraging that real estate in whatever way you want to. Warehouse, like I said, rent out warehouse space, rent out workspace that people can bring in workbenches. It's like I said, you'd be surprised how useful a large empty building is. You can do a lot with it. As a matter of fact, the options that you can do with it are only limited to your imagination. So whatever ways that you can get out there and leverage that, by all means, go out there and do it. Um, and I guess that once we've covered residential real estate and we've covered commercial real estate, the other thing to cover is financing options. Now, real estate is something that everybody wants. It's a finite asset, and those are my favorite kinds of assets to get invested in, which means that when you buy real estate, it's unique, and there's only so much of it out there. You know, there's only so many square footage on this planet that you can buy, and having a piece of that for yourself that you can leverage and use is very important. As a result, it's become more and more expensive over the years to get. And the main reason for that isn't just inflation, it's the fact that people are more and more willing to go deeper and deeper into debt relative to the price of the real estate to make it happen. You know, it wasn't uncommon that a few years ago you didn't need a mortgage. Like coming out of the World War, it took maybe a year's worth of salary to get your first home. And you didn't really, if you needed a mortgage, you were putting 20% down and you could pay the rest of the mortgage off over the course of maybe 4 or 5 years. That's why interest rates were so high back in the days, because loans weren't nearly as big as they are today. As interest rates creep lower and lower over the course of the decade since the war, the prices of real estate has risen higher and higher because people are willing to get longer and longer term loans. It's just a bunch of different factors that are slowly adding up that are making real estate more and more expensive. And something's got to give sometime soon. So the reason why I'm getting into all of this is because eventually interest rates will stop going down and people aren't willing to get a mortgage that's longer than 40 years. And eventually people aren't going to be willing to pay 10 times their annual income for a piece of property that they have to go 95% into debt on and just slave away for their own home for the rest of their life. Those days are slowly coming to an end. So if you are in real estate, I would find a way to leverage it the best you possibly can to get that loan paid off, because you're not going to be able to guarantee that the price is going to go up forever and ever. And once that becomes evident, people are going to lose their minds because they have gone deep into debt at ridiculously out into the horizon length loans to just live in their property. And they've just had the absolute privilege to take loans out against that property thinking that it's going to go up forever because of inflation and everybody needs a home and all of that. But ultimately, at the end of the day, it's multiple different factors. The way that I like to look at it is when I'm investing in real estate, I like to go to the bank and make a deal of my own. I'd like to throw the paperwork in their face and say, look, you know, if I'm giving you a down payment, I'm going to be giving you a down payment of 20 to 35%. And when a bank hears 20 to 35%, they're usually not willing to look at your employment information after that because they don't really care. If you're willing to put that much down on a property and you're unable to make your mortgage payment, it is going to be very easy for them to turn a profit to just turn around and sell your home. So I challenge you, I thoroughly challenge you, if you're going to invest into real estate, commercial, residential, whatever it is, find a way to leverage it in a way that nobody else is willing to. If you're going to buy your first house, you know, It's not going to be the dream home right away. If you want to be able to continue to grow your lifestyle over the course of your life and provide new and new things for your family, find a way to leverage some of those rooms. Find a way to turn it into a duplex. Just find a way to get some sort of cash flow and reduce your overhead expenses, because ultimately all life is a game of is reducing the amount that you spend and increasing the amount that you make. And the difference there is the investable amount. And the investable amount is good because, as we mentioned in the last video, assets tend to compound. So the more that you can get put away early at 5%, the better it is for you in the long term. And that includes your house. Don't just rush right into the American dream, because in all honesty, unless you're willing to sacrifice the first 5-10 years of your life to squeeze out whatever yield you can out of your house, you're going to fall behind. You need to find a way to reduce your monthly expenses. And ultimately, if you can find a way to reduce your monthly expenses while getting some sort of cash flow to pay for everything, speaking from experience, that's how you retire. It's not by making enough money to pay for your Lambo or to pay for your house or to pay for all of this expensive shit. It's to, excuse my French, sorry, I don't want to make a habit of swearing on this channel, but in all honesty, I try to be authentic, so I swear like a sailor. You're going to see that out of me. The idea is to figure out a way to reduce the amount that you spend and increase the amount that you make. And in all honesty, when you spend a very, very small amount of money, you don't have to make a lot of money to retire. I don't know if you can tell, but I'm not in a studio. This isn't the most lavish lifestyle. I claim that I'm retired, but ultimately that just means that I can do whatever I want within reason. I don't own a car. Cars are expensive. Insurance is expensive. Gas is expensive. Maintenance is expensive. I don't own a house. Property taxes are expensive. Mortgages are expensive. You know, repairs are expensive. Your roof goes, that's $20,000 that you have to drop. Houses are not cheap. They're not. And ultimately, you add all of these costs up, and then you get a loan on that house, and you have to pay interest on that loan. You're not making a net profit as the price of your real estate goes up. And especially if you decide that you're going to use your house like a piggy bank and take a home equity line of credit against it. It's ridiculous. You can't do that. And anybody with half a brain would sit down and know that the house that they plan to live in is going to keep them a slave to their job for the rest of their life. And I'm sorry, I know some of the word slave is not something that's used properly, but what else would you call that? Genuinely, what else would you call being forced to work at a job that you hate for 33 years just to pay for a house to live in, when you could have spent 5 years renting the rooms and struggling, living on a mattress on the floor, fighting tooth and nail to not spend a dime of your money, so that you can instead spend it on compound interest, cash flow, yield. Realistically, I'm going to say it multiple times on this channel, but it's a game. You reduce your expenses, you increase your income, and then you get to a point where the income is higher than your expenses. And guess what? If that income is something that you don't need to work for, such as a dividend paying stock or real estate that you've leveraged to your benefit, it doesn't matter. You don't pay for things and you get income. Guess what? You don't have to work for your income anymore. And then all of a sudden, you can do what I'm doing right now, which is making YouTube videos without a script, talking about things you already know, and that can be your contribution to the world. It's that simple. With that being said, I'm going to leave you guys here. I'm going to go get some breakfast, and maybe you'll see another video later today. I'm going to definitely go into commodities, and then one of the most interesting asset channels or asset class videos on this channel is going to be delving into cryptocurrency, because there is a sector where you can use critical thinking to pay for things, and I need to make that video because cryptocurrency is not an understood asset class. But anyway, this is a real estate video. If there's other things in real estate that you want me to cover, by all means. I wasn't going to go super in depth. This is more of a critical thinking and ideas channel. Like I said, I'm trying to spread the message of how I ended up retiring myself and how you can do the same. With that being said, take care, guys.